Have you ever noticed how a single piece of news can shake the currency market in just minutes? This is the power of economic information and how to use it to your advantage in trading. And that's exactly what we're going to be talking about in today's video. I'm Chad with Zero Markets, and stick around because I'll explain everything. The currency market is extremely sensitive. A monetary policy announcement, an inflation report, or even an unexpected comment from a central bank president can change the direction of a currency pair instantly. But how does this actually happen? And more importantly, how can a trader turn these swings into opportunities? Let's break it down step by step. First, what exactly are economic news releases? They're events and indicators that reflect the health of a country's economy, or even the global economy. Examples include unemployment rate, inflation, GDP, interest rate decisions, fiscal policies, and labor market reports. The key point is that they're released on specific dates. Anyone following an economic calendar knows these are decisive moments. Now, how do they impact the currency market? When positive news is released, like stronger than expected growth, that currency tends to appreciate. On the other hand, negative news can drag the currency down quickly. A classic example, if the Fed announces an interest rate hike, the dollar tends to strengthen because it offers more attractive yields. On the flip side, if the European Central Bank cuts rates, the euro may weaken, creating selling opportunities. These moves are the essence of the currency market. Rapid reactions to economic expectations and realities. If you made it this far in the video, let's talk about how to actually take advantage of economic news. Here's where practical strategies come in. First, economic calendar. Having a reliable tool is essential to prepare for news releases. Second, focus on the most affected currency pairs. If the news is about the US, look at dollar pairs. If it's about Europe, focus on the euro. Third, interpret in context. Don't just react automatically. Sometimes a piece of bad news is already priced in by the market, and the real reaction goes the opposite way. Fourth and final, monitor market behavior. Some news triggers immediate impacts, while others have a gradual effect. Knowing the difference is what separates reactive traders from strategic traders. The currency market isn't driven only by charts and numbers, but also by information and expectations. Traders who learn to follow economic news, interpret its impacts, and act with strategy significantly increase their chances of making smarter decisions. If this video helped you better understand how news moves the currency market, hit subscribe to follow the Zero Markets channel and keep following our content. And don't forget to interact by sending your questions and suggestions in the comments. We'll be happy to hear from you.